Hey traders, Nick Shaheen here, looking at this new tool I'm testing out. It's a market structure edge. It's basically giving me a sentiment gauge, but it's not a touchy-feely thing. According to the people that made it, it's got science behind it and actual data that translates. They translate it into a scale. So sentiment goes from 1 to 10. 1 not so much love, 10 too much love, basically. And I'm going to try to see if I could use it as an added tool to help me stay in my trades longer, or maybe kind of like a, hey, before you get in, I like your thesis, but consider this because of this pattern or that. So I came across these guys by mistake, not by mistake, by chance. I was doing a presentation and they were the presenters ahead of me, and I thought to myself while I was waiting in the quote green room, hey, this is something I could probably use because I don't have any measurement of sentiment right now. So I don't get paid by them. I get to play around with it until I get comfortable with it, just like anybody can. You can sign up for free, I think, for a couple of weeks. But so the good thing is that they're responsive. I think they have a pop-up box. This is a dark mode. So yeah, you can ask questions right here. And they do help with the translation of the data in front of you. So the idea is to see if I can pick a pattern on a stock. Different stocks behave differently. So what if I was looking to trade AMD and I wanted to see if I can pick a pattern that gives me an edge here? So I'm going to just start fresh. The profiler will tell me what kind of a profile this company has, in my opinion. So I'm going to go AMD and I'm going to take everything default. Since I'm not an expert, I don't know enough to change it right off the bat, so I'm just going to take the default date and everything. So sentiment, it's basically the buy threshold is 5, the sell threshold is 5. So it's a mean reversion thing. When it comes back from being hated and it hits 5, it's the buy. And then when it comes back from being loved, it hits 5, get out. That's the idea. So this is the base, right? So it looks like for the active trading returns, because it has 3 separate active days, trades, stints, 28%, which sounds great, especially that it beats the S&P of 10. But it's not so great because if I had just bought it and held it, I would have made 38%. I grant you this is an unusual period of time. We're coming out of a deep hole from COVID, but this concept, I bet you, still translates. So, and I'm looking at the data to see if how can I change these in order to give myself an edge, if there is one. Sometimes there isn't one, and I come across somewhere I was like with NVIDIA, I'm having a hard time finding the same logic in NVIDIA. So days above 5, 55. So a lot of days above 5, not as many below 5. So it spends more time being loved, and only 9 days at 1 being hated, and a lot of days being loved, overly loved. So maybe if I can lower the threshold on the bottom, I can try to capture more of that opportunity where it's rare, right? It's more rare to be hated than loved. So I'm going to go to 4. And now I'm at 37. Now I'm even already. So I already improved my chances, my trading stints, to match the performance of the stock. Same period, except I'm saying when it's coming up, don't wait until it hits the mean. Buy it early, on its way up from being 1 or whatever it is, hated to the mean of love. Sounds weird, but I already improved myself. So I'm going to go down to 2, skip 1. All right. So now 53. So now I have an edge. I literally have an edge. So if I buy it on the way up, if I'm looking to buy it and I look at sentiment and it's a 2, it's confirmation that I'm doing the right thing from my own thesis. That's how I envision myself wanting to use this, okay? The other way, if I use it, if I'm already long, I don't get out until it hits the threshold where it tells me to get out. And we'll see if I can find that. Excuse me. So I'm going to go to 1 and see what happens. Okay, so 56, 38. I like it. All right, so let's see if we can pick out the stint here. So in this case, on 7.7, sentiment was 1.8, and it's a buy, and sentiment rises, and then it hits 5. This is where it would have told me to buy it first time, and then it goes above, and then love, 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 and then starts going down, right? But they say don't get out until it loses 5. That's what the parameter I set in this page. So if I changed it to say get me out at 7, it would probably get me out here. Yep, because I own it and then it starts coming down, it would probably get me out here. But in this case, I told it keep me in it until it loses 5. Boom. Sell. So I would have stayed from 7.7, so over a month in this. And that would have given me the high return. That's because it got me in early enough, and it told me stay in it. People love this thing. And that's how I could have beat the 38% that the stock did anyway. All right, so there's another layer, which is this one, short volume. So I think the way they explained this to me, I got lost in what this means because I was like short percent, like short float and all of that. So the way you can think about it is product on the shelf. So if you don't have a lot of product on the shelf and it is hated, then in theory, once it starts getting loved, there's going to be a grab for the few products, and it's going to be a spike, like a squeeze of sorts. So in theory, a high number here is bad. But in this case, the high number is good until it drops, which is pretty weird. So I would make a note to myself that seeing a high number here is not going to stop me out of it. This is the way I think I'm going to start using this, and I'm trying to get better at it to where I can get confidence. And this stint here just started. So it recently was hated last week, the last dip in the NASDAQ, and it hit, I told it, okay, so based on this profile level, this should be a good point. The only difference is this number here. So it was 60 here and it's 49 here. So now it's on me to see if it's a deal killer for future stints. Okay, so let's look at the chart here. AMD, 1 day. This is long term here. Let's go to 240. All right. So I like the fact that I have support below, and I like the fact that I have triggers above. The resistance, which is actually triggers. So I have one right here. This candle is pretty funky, so I have to pay attention to it because of these 2 red candles. So these 3 red candles really is what I'm trading right now. It's this. Actually, check that. This candle here, which is basically these 3, which is a pivot zone for the last few weeks. So I'm happy about the action here, and this would be a trigger up. This would be another trigger up, but both of these are also resistances, so they're the opportunity. So what this edge tool told me fits, and now I have to just keep tracking and looking and using to see how I can give myself an edge. Literally, this is what the tool is trying to give, an edge over the competition, right? Competition. Now I have an edge. Let's see if it's repetitive. Let's see if it's something that I can use over and over again. Again, this is not the tool that is going to say, oh, you follow this, you're going to have guaranteed results. If somebody tells you there's a tool like that, run away. So I'm trying to see if this will give me an opportunity to, if I'm long something, why I shouldn't get out. Like this morning, I came into the dilemma. I was long the GDX on the pop. Like, should I get out? And the XLK, should I get out? Well, this would help me answer the XLK kind of because it's the tech. That would work with the SMH, for example, because if it's up, then Nvidia's up, then the whole sector is up. So it's an added layer into my toolbox already. I love what I'm seeing so far, and in fact, I do like this a lot. The dashboard when I log in. I see this. So this is like a snapshot of what's overloved, what's oversold, basically. If I see a very little of this color and a lot of that color, it's oversold. I'm okay going long. And because, like I said, the short volume thing is basically product on the shelf. And if I don't have a lot of it, that's opportunity, because we may get a demand spike and there's nothing on the shelf, then price will go up, in my opinion. Sentiment, the lower the better, right? If there's no expectations of upside, then everybody hates it, then the incremental buyer is more likely to appear than the incremental seller. That's the way I see it. And it probably translates into here, because the selling in the NASDAQ was fierce. There go FANGs, right? Financials are hated. Although, this is kind of wonky. I don't know why, but there might be some sort of funny thing going on between large financials and small financials. I'm not sure. I built this the other day to GDX because I was in the trade of GDX and I wanted to see if I can get an edge on it. So I added all the GDX stocks that are in the ETF, and this way I can see it. I can drill down and see which ones have upside. So it's telling me that they're not loved. So if I'm long, I'm okay. I'm committing something stupid. And this one will give you like a big picture helicopter view, the broad market sentiment. So how can I use this? Let's see here. If I go into chips and I pull up, let's say NVIDIA, it has these charts. So you'll have to read them, learn how to read them. It defaults to a period of time, 30 days it looks maybe. And it shows you the love and the closing price of this of the stock. So up here it's a 10, 10, 10. Everybody loves it. Everybody loves it. And then down here everybody hates it. Everybody kind of halfway through. So it goes from 1 to 10, right? So then the trick is to find where's the opportunity at 1, and if so, where's the supply? The supply. And then this is the overall market structure. So right now, let's see. I can take out NVIDIA just to see. So that 4.7 number, you saw that at the top of the page here. If I go to dashboard, right there. So this should tell you, boom, and then you can drill down on the sectors I want. All right, it's a pretty slick tool. Sounds like a commercial. I promise you, I'm not getting paid. I'm going to put a link down there, and there's no like cookie or whatever you call that. I forget now what it's called. A tracer back to me. I truly enjoy it. Pretty good. I still don't know how to use it 100%, but I'm getting better. Just because I can make this video and make sense of it, I know it's a usable tool that I will definitely have going forward.